Hello, hi, very good morning. Thank you very much for joining us today. I hope I am audible. Yes. Hi, Yamuna. Very good morning, people. Hi, Karthik. Yeah, so we have been doing live on Facebook and YouTube for a while now, and today for the first time we are doing live on LinkedIn also. So thanks to our clients for their suggestions. Yeah. Hi, hello. Yeah, thank you for all your inputs. So we call our program as iLead Tax Talks. Okay. So whenever possible, I come live on the topics that we feel is relevant, and based on our interaction with clients also, we come across certain frequently asked questions. So we make some topics with some basic content so that clients can go dig deep into it, and it will also help our students also, because I run an academy too, wherein we work on producing enrolled agents, payroll professionals and accounting professionals. Okay, so I am Nanda Kumar K V at iLead Tax LLC and iLead Tax Academy, and today I am talking from iLead Tax LLC, and we call this show as iLead Tax Talks. So today I wanted to talk about 10 things that one must know about C corporations. Okay, so far we have spoken about single member LLC. We have spoken about sole proprietorship. Then we have spoken about limited liability companies. In our last session we spoke about S corporations, and today we are going to talk something about C corporation. So this is not going to be like all about C corporations, but there are some 10 things which I want you people to know. So let's dive into the topic. Okay, so if you look at a survey and calculate the number of tax returns that different businesses have formed over a period of time, you will see that partnerships are 8.4%, S corporations are 8.1%, C corporations are 13.6%, and sole proprietors are 69.8%. Now some statistics also say that the sole proprietors are more than 70%, 72% or something like that. Anyways, whatever it is, so when you have that spirit of entrepreneur deep within you, and you have a wonderful idea to serve the community with your product or your service, you will definitely become an entrepreneur. Yeah, and we as accountants or tax advisors, it is our responsibility that we guide you on what is the right business structure that must be applicable to you. Okay, so today's show is all about a little about C corporations, and I request you to please like, share, subscribe and comment whichever platform you're watching us, so that we stay connected. Now, one of the major things that C corporation is known for is low tax rate. Okay, now just to give you an overview of this, C corporation, this has the potential to grow in unlimited way because of the sale of stocks. So when somebody is going for listing and things like that, or shared stocks and all, then C corporation is ideal. It enjoys specific tax advantages like tax deductible business expenses. You can deduct a lot of expenses. Yeah. Hi Alex. Next, in this corporation, the shareholders cannot deduct losses on their personal tax returns, like what we discussed on the pass-through entities when we were doing the multiple member LLC, or when we were doing S corporation or partnerships. It was a pass-through entity, right? The partners or the members will get schedule K1 and then it will flow into their personal tax returns. But in case of a C corporation, it is not like that, and this has a different tax structure compared to other business entities. Let's get to know more about this. Now let's break it. Let's go piece by piece. So what do you mean by C corporation? C corporation legally separates owners or shareholders' assets and income from that of the corporation. C corporations limit. Okay, the first point, what I mean, it's a separate entity. So as in a sole proprietor, unincorporated sole proprietor, the sole proprietor and the business is the same. But the moment you form an LLC, it becomes a limited liability company. This is what we have been discussing. Okay, that's why we urge that your business idea, whatever business entity you want to form, you should give that a structure, a proper business structure, so that your personal assets are unaffected and untouched. So that's why it's a separate legal entity. Next one, C corporations limit the liability of investors and firm owners, since the most that they can lose in the business failure is the amount they have invested in it, right? That's what is the corporate veil. So the amount, it gets restricted only to the assets in the business, and it does not extend to their personal assets of the owners or the shareholders. Next, C corporations are mandated to hold annual meetings and have a board of directors that is voted on by the shareholders. Okay, now this is something that your accountant can always handle. Next, how to form a C corporation. Now, everything, whether you're trying to form a company, LLC, or a corporation, the process remains the same. Okay, almost all the process remains the same, but C corporation has more of statutory requirements. So let's take a look at this. Choose an available business name that follows corporate naming rules set out by your state. So like how we discussed earlier, each LLC, each company is incorporated in a particular state. So similarly here also it will be incorporated in a particular state. So there are certain rules that you will have to follow when you are naming a company. You cannot name a company with something that is already named. Yeah. Next, register for an employer identification number or equivalent form of tax ID number. So just like how you have an SSN for an individual, similarly for a company you should have EIN, that's called employer identification number. Next, appoint the directors of the C corporation. Just like how you have members in an LLC or shareholders or members in an S corporation, similarly in C corporation you will have directors. Next, register your C corporation by filing the articles of incorporation. Just like how you form an LLC by filing articles of formation, similarly for C corporation you will incorporate by filing articles of incorporation, and this will vary from state to state, and you will need to pay the filing fees for the paperwork, and the fee ranges normally the charter fees or filing fees, the state filing fees, it ranges from $100 to $800 depending on the state you incorporate in. Next, you have to issue stock to the initial shareholders of the C corporation and then obtain the necessary business licenses and permits, which is relevant for your industry. Now, what are the benefits? When there are so less people, who are forming C corporation, what are the benefits? Why would somebody want to form a C corporation? The first thing is ability to raise capital. Ability to raise capital. 2, of course, liability protection, long life expectancy. 2 and 3 are always there with other entities too, but ability to raise capital, especially if you're going big, then forming a C corporation is recommended. Now, what are the disadvantages of forming a C corporation? First thing, it's expensive to incorporate, they say. Next, of course, increased regulations and paperwork. Then double taxation for investors when dividends are paid to them. Double taxation. Now, what is this double taxation? Okay. Now, what it means to say is, as a owner of the organization, owner of a C corp, who is also the employee of the organization, he will receive a salary, he gets taxed, and if he receives dividend from the company being a shareholder, even that will get taxed. Okay, so there's an element of double taxation, and also as an organization, whatever profits remain, again he has to pay tax on that. Flat 21%. Now, these are certain tax rate analysis that you see here. 21% for C corporation, and S corporation, it's a pass-through entity. So whatever are the profits and losses that will flow into the partners or the shareholders' personal tax return. Okay, we discussed this already, so you can just take a look roughly at the tax structure, tax rates that is applicable for a C corp and S corp. I'm giving you, some basic information, and I welcome you to please contact our office or your accountant with more questions on this particular topic, because in case you want to form, a business, because now it's hot and happening. I mean, most of our clients, even our individuals, they maintain the books of accounts, they track their finances, and then they plan their taxes, and eventually whatever business income, that side hustle, whatever they are doing, now they are giving it a shape in the form of a business entity. Okay, so talking to your accountant and getting more information on this is always good before you go ahead and form something on your own. Okay, while Google has all the answers, are all answers authentic? That is something only your accountant can establish it for you. Okay, now let's get into further details. Now, what are the requirements of C corporation? Adopt corporate bylaws, file an annual report in the state where you are incorporated and in the states where you do business. Okay, so there are times that you may be, in Pennsylvania, and then you may also be doing business in Texas, California, and all. Okay, so there are chances, that the states may require you to file an annual report in the state where you are incorporated, and also in the states where you are doing business, in case your employees are working there or you have your store running there or something like that. Next, hold shareholder, director, and special meetings. Document meeting minutes and resolutions. Then maintain separate business finances. Then document company transactions and contracts in writing. Record the issue of new stock in the company's general ledger and balance sheet. Then pay annual taxes and franchise tax. Now, this is a portion of it. Okay, so these things are certainly important and it needs to be complied with. Okay. What businesses are C corporations? C corporation ranges from small companies to organizations with hundreds of shareholders and a director. Okay, now when we were talking about S corporation, we said, the number of members must be restricted, only to 100, right? And also, the type of people that should come into an S corporation, C corporation, into an S corporation also we discussed in our last session. Now, this one is something, there's no limit, and even a non-resident can be the owner of a C corporation. Now, what is best? So, after listening to all these things, I get this question, often, what is best? Is S corporation best or C corporation best? Which one is the right thing, to form? So when you're deciding, which status to choose, ask yourself, a few questions like, do I want my company to get acquired in the future? One. Do I want to limit my shareholders? Now, should I say that I'll have only 10 people, I'll have only 50 people, I'll have only 100 or less than 100? Is double taxation worth it? Should I go for this double taxation? So it's like importing a car. It's like importing a car. That's my personal opinion. Okay, so is it worth it? Yeah, it may be worth for some. Next, am I okay with the extra scrutiny? They say the chances of getting audited are more with S corporation and C corporations, but if you have a proper accountant who can back you up and you maintain the proper books of records and you pay your taxes promptly, I don't think you should be worried about any scrutiny. Yeah. Then, is there another option that works for me? Speak to your accountant. Now, here I wanted to give certain fundamental differences between an S corp and a C corp here. So if you see certain basis of comparison, I've taken number of shareholders in an S corporation must be less than 100, but in C corporation it could be as many as possible. Then nationality of shareholders. S corp, it should have only US citizens and lawful permanent residents, legal residents. C corporation can be any. And then locality of operations, S corp must be in the US, C corp can be anywhere. Then share classes, S corp should have only one class of stock, C corp can have as many classes as it wants. And then formalities, many internal formalities would be there in case of S Corp. C Corp, less internal formalities. Now, ownership transfer of an S Corporation is pretty easy, while C Corporation, it's a complex corporation, that's what they say. And then tax payment in an S Corporation, the profits are not taxed, whereas in case of a C Corporation, profits are taxed. Okay, now federal and state differences. Okay, C Corporation taxed as a separate entity. S Corporation avoids double taxation. Then C Corporation shareholders are not taxed. S corporation doesn't pay income taxes because it's a pass-through entity. Next, C Corporation shareholders pay income on payments from the corporation, whereas S Corporation can exclude losses on personal tax returns. Next, C Corporation is always recognized by the federal and state. S Corporation is not recognized in certain states. But the fundamental thing is that in an S Corporation there's no self-employment taxes. That is something that saves you. And here in C Corporation you have that double taxation. So if you are somebody who is small, who's just starting or who's just doing like anywhere between 1 to 5 million, I feel that's my personal opinion, S Corporation might be better for you. But still, considering other factors, the recommendation may change once we get to discuss with your accountant. Now, C Corporation, more tax-free status on the fringe benefits. S Corporation, less tax-free benefits for shareholders. Then, as we discussed earlier, C Corporation can have multiple classes of stock. S Corporation is limited to only one class of stock. C Corporation can choose when fiscal year ends. S Corporation fiscal year must end on December 31st. Then C Corporation, bigger corporations required to use accrual method. Then S Corporation, only those with inventory have to use accrual accounting method. See, in case you have any questions on these things like fiscal year and then calendar year, December 31st, anything any year that ends on December 31st, that's called a calendar year. And if it is not ending on December 31st and you have chosen some other date, then it's called a fiscal year. In case you have any questions on anything that we are discussing here, you can WhatsApp or email us, or you can call our office and we'll be happy to assist you on that. Next, C Corp or S Corp. Okay, now taxes, it is just a repetition. Okay, so different contents that I could gather to give you a better understanding of these two corporations. I thought I'll just bring it to light. Now, C Corp and S Corp taxes. Now, double taxation, pass-through tax formation can form by registering with the state, can only form if already C Corporation. Next, shareholders, unlimited number of shareholders in a C Corp. Now in S Corp, no more than 100 shareholders allowed. And reporting gains and loss, now tax return and all. C Corporation is filed on 1120, S Corporation is filed on 1120S. Then how to pay yourself as a business owner? In C Corp you pay salary, and in S Corp you give salary and distributions also, profits also. And the fees and all that will apply anyways. And in my last video also I happened to give a clear-cut comparison on these 4 types of entity: sole proprietorship, C Corp, S Corp, and then an LLC. Okay, so I request you to go through these, based on the formation, based on personal liability, administrative requirements, management, the longevity term, then taxation aspects, double taxation aspects. And then from a self-employment tax perspective, pass-through tax treatment, tax forms, transferability of interest, capital raising, ease of operation. While most of it, it gets covered, in our conversation, but still, again, drawing a basis of comparison, a point of difference, and then giving you, that subjective comparison for each of this business entity, it will clarify, any other doubts that you may have. So I request you to pause it. Once we are done with the live, probably you can pause it and then take a look at each of these comparison points that we have made available to you. Now, can LLC become C Corporation? Most states allow LLCs to be converted to a corporation by simple filing of documents with the state. So there is a form called Form 8832, Entity Classification Election, which is a tax form that allows certain businesses to select whether they want to be taxed as a C Corporation or partnership. I've shown this even in our previous sessions also. those two forms, LLC trying to become a C Corp, file 8832, LLC trying to become an S Corp, file 2553. Okay, so these are the forms that I told you and I've shown you in the previous sessions also, so I will not show that again. You can always Google that. But LLC, basically, if you see, it can become a partnership also if it's a single member LLC. Unincorporated, that is sole proprietorship, but once you get it incorporated, it becomes a single member LLC, which is a disregarded entity. And again, more members join into the LLC, it becomes partnership, and it's a clean flow through, pass through entity. And then semi flow through, S corporation, it is also a pass-through entity, but like what we discussed last time, in case there are built-in gains tax, an S corp, a C corp converting into S corp at the time of liquidation, or some passive income which only the S corporation has received. Now on those things, obviously S corporation will pay taxes. But otherwise, the regular course of operation, the profits, whatever that comes in, it is divided among the shareholders or the members in the agreed profit sharing ratio. And then C corporation is an independent entity, and then it's separately taxed. Okay, so just to give you an overview of this. And also I have given this even in our last session also. So whenever somebody is incorporating a business, rather than being an unincorporated sole proprietors or unincorporated unregistered partnerships, okay, the moment you give a legal structure to your business, so it could be either a C corporation by default, or it could be an LLC. Okay, now if you are one member, then it will become a single member LLC, sole proprietorship, single member LLC, disregarded entity. But if there are two or more members, then it will be treated as a partnership. And obviously, from being an LLC also, again you have the choice either to elect it to be treated as a C corp by filing 8832, or elected to be treated as an S corp by filing form 2553. Okay, and of course, again, after becoming a C corp also, there are chances that you may want to elect to be a S corporation. Okay, so just to give you a rough overview. Now we can't discuss all the different scenarios here, but just to give you that basic knowledge, so that in case you have more questions, you can always feel free to contact our office or your accountant. Now, can S corporation become a C corporation? Okay, the IRS does not offer a standard form for changing your company's tax status from S corporation to C corporation. However, it simply requires a written statement to be filed with the appropriate IRS service center, along with a consent signed by majority of corporation shareholders. So when you say majority, at least 50% should consent to that. Then what tax forms do C corporations file? The C corporation tax return uses form 1120 to file a federal tax return in order to pay applicable taxes due to the Internal Revenue Service. So let me quickly show you how a 1120 form looks like. I have shown you last time 1120S, then also 1065. Today I'll show you 1120. This is how 1120 looks like, a C corporation tax return. Part 1 is income, receipts, cost of goods sold, gross profit, dividends, interest, rents, royalties, capital gain, net gain, other income, and then all the expenses, compensation of officers, salaries, repairs, bad debts, rents, taxes, interest. You have the line items mentioned here, okay, and then you get the taxable income, and the tax gets calculated on line number 31, and that's how it is. And then Schedule C talks about dividends, inclusions, and special deductions. Then J, tax computation and payment, and there are other annexures also to be followed. Schedule K, then L, balance sheet as per books. Then M1, reconciliation of income as per books with income as per the return. Then Schedule M2, analysis of unappropriated retained earnings per books. Hi Hari. Fine. Okay, so this is about it. So that's how a tax return looks like. Okay, so in case you are willing, to start your business and you're confused as to which entity to follow, to form your business into LLC, LLP, S Corp or a C Corp, I encourage you to have a word with your accountant so that they can guide you better. Okay, your tax advisor is your minister. They say that customer is the king. So if you're a king, you certainly need a minister, because this is what we do. All day just into taxes, accounting and bookkeeping. So it will be ideal for you to get in touch with your accountant and seek that counsel and then decide what you want to do. Okay, and as a disclaimer, okay, it's primarily we are doing these videos so that it can create awareness, so that people can get to know about different business structures and about certain tax topics, awareness, and that content on the taxation, for free. And if you need, any tax consultation on any personal or business tax matters, please feel free to contact our office, and also you can also write to me, and or you can connect with us on LinkedIn also. And different tax planning subject matters, based on your scenario, whatever applies to you, you can always discuss that and get a second opinion and then choose what you want to do. And as the tax deadline is approaching now, it's the Thanksgiving time, and also that the year is coming to a close. If you have still not planned your taxes, I would encourage you to go to your accountant, your tax advisor, and ask him to plan your taxes and give you some last minute recommendations to see if you can do something on it. And here at iLead, we have a early bird offer that is running on account of Thanksgiving. So you can file your federal and each state tax return at just $29.99 each. And in case you're looking for any other services like ITIN, FBAR, FATCA, even Indian tax filing, or any schedules that needs to be annexed to your tax return, even that comes for $29.99. But if you sign up before December 31st, you get it only for $19.99. And here are some write-ups on why you should subscribe to iPlan monthly tax program. Because here at iLead, we believe that planning your taxes, tracking your finances is more important than just filing your taxes. Because when you plan your taxes, when you track your finances, and with those planned taxes, with those saved taxes, you are making the right investments. I think that's what you're supposed to do with your hard-earned money. Make your money work for you. Okay, here are some features of our iPlan tax program. So we do our best, though I am always inspired by this, how Albert Einstein said this. They say, that the hardest thing in the world to understand is income tax, but we do it our best to make it easy. I run a tax academy also, wherein I teach taxation, bookkeeping and payroll also. So this is what, we do all in all. So I encourage you to put in a word for us, and whoever is looking for a career in US taxation, you can always recommend them iLead Tax Academy. And if you like our work, and if you want me to do more tax videos on any other tax, accounting or payroll matter, please feel free to let me know by email, WhatsApp, or by messaging me on LinkedIn, and me and my team will be happy to work on that and present that content to you. Thank you very much. I hope you enjoyed today's video, and if there is anything that we can do better, please feel free to write to us. Thank you very much. Please do like our video, share it with at least 3 people so that they can get to know what these C corporations are all about. And also I would also request you to go to our video library in YouTube and also our Facebook page to check out the videos that we have done already too. It may give you some insights to plan your taxes better and structure your finances better. All the very best. We look forward to see you as a wonderful entrepreneur that the world is waiting for. Take care. Good day. Bye-bye.